Good morning. This is Japanese Economic Review Channel. Welcome to our weekly market outlook for April 27 to May 1st, 2026. This week marks a historic milestone as the Nikkei 225 tests the 60,000 threshold. However, underlying this momentum are significant macro risks. We will navigate the critical crossroads of an overheated AI rally, rising geopolitical tensions, and a central bank super week. Let's dive into the core themes driving the markets today. The Nikkei 225 stands strongly at 59,716, actively testing the historic 60,000 mark. This surge is heavily driven by momentum in the AI and semiconductor sectors. Similarly, we see key levels across global markets, with USD JPY hovering near 159.31. However, while the headline numbers look incredibly strong, it's crucial to look beneath the surface to understand the true vulnerabilities and market dynamics. The market psychology is deeply fractured. While index euphoria pushes the Nikkei higher, the reality is starkly different. Declining stocks significantly outnumber advancing ones on the prime market. Many individual equities are hitting year-to-date lows. Furthermore, soaring semiconductor prices threaten to inflate broad input costs. This heavy reliance on AI masks a vulnerable market breadth. Geopolitical risks remain a major market driver. With US-Iran negotiations stalled, the Strait of Hormuz is a critical flashpoint. If restricted, crude oil futures will rebound, driving broad sector margin pressure. Conversely, a sudden peace agreement could instantly trigger a massive risk-on rally. These dynamics directly threaten to undermine AI-driven corporate earnings, making close monitoring essential. We're entering a rare central bank super week. The BOJ is expected to hold a neutral stance, delaying rate hikes due to geopolitical uncertainty. The FOMC is also likely to hold, with a hawkish lean following strong US retail sales. Meanwhile, the ECB is signaling a policy pause. This divergence in monetary policy will inject extreme volatility into the currency and equity markets this week. We forecast the Nikkei range between 56,500 and 60,500. Given the overheating in AI, these sectors are vulnerable to near-term profit-taking. Instead, a rotational shift is emerging towards heavy industry. Companies like Mitsubishi Heavy Industries show a positive shift, benefiting from a global surge in defense and energy infrastructure investments. Defensive positioning is key right now. For USD JPY, we forecast a range of 157.00 to 162.00. The US-Japan yield gap remains wide, capping downside risk with a hard floor at 157. However, approaching the 160 mark enters an acute red zone for government intervention. If the market believes the yield gap will persist, the dollar may test the July peak of 162. Extreme caution is advised in this highly volatile currency environment. This week's timeline is packed. Monday and Tuesday focus on the BOJ decision and US consumer confidence. Midweek brings the FOMC decision, Powell's presser, and the ECB meeting, creating an extreme volatility corridor. Japan observes Showa Day on Wednesday. The week concludes with crucial US PCE, GDP, and ISM manufacturing data. This historic collision guarantees a turbulent week. Alongside central banks, we face a barrage of mega-cap earnings. In Japan, giants like Hitachi, Shin-Etsu, and Tokyo Electron report this week. In the US, focus is on tech titans: Microsoft, Alphabet, Meta, Apple, and Amazon. This earnings block will serve as the ultimate stress test for the AI overheating thesis. Forward guidance will dictate sector flows moving into the third quarter. First, expect equity volatility. Index highs mask weak breadth. Anticipate profit-taking in AI and a rotation toward heavy industry. Second, exercise extreme FX caution as USD JPY approaches the 160 intervention zone. Finally, wait for the late week dust to settle. Medium-term trends will solidify only after central bank decisions and Friday's ISM data are digested.